Hi. Oh, that's loud. Can you turn it down a little? Is that better? Awesome. Thank you. So I'm Lawerence Lerner. I'm the CEO of Pithia, one of the two investment funds for the RCON cooperative. And as you probably know, we went live with the testnet today. And we're here, basically to support the community. You had some good questions, and I'd prefer that we make this interactive rather than, us just going through the slides today. And my colleague Evan Morris will come up later, talk about the team and some of the other things that we're doing. But, at the end of the day, we're here to help the co-op by investing in companies. And we look for live companies or companies in the concept stage that are building full-scale businesses. So we look across the value chain of what people call seed stage, to friends and family round, angel rounds, and Series A, and even more mature companies as we do the investments. And actually, I kind of hate those terms because it puts you into a box that says, you're this kind of company, you're this size company. What we look for are companies with good business plans, all of the basic fundamentals, and we'll talk about some of the other things that go with that, but that are also building, of course, on blockchain. We get a lot of companies that sometimes come to us and say, we haven't put anything on the blockchain yet, but we're thinking about it. And that's part of the things that we do, what we call meaningful use, to help companies think about how they can put things on blockchain or transition to blockchain, because we run into a lot of existing companies that have been in business for 10 or 15 years, and we've got 3 of those in the pipeline today that are moving from their traditional business into the blockchain, and obviously looking at RCON as the premier platform for them to move into. Some of the things that we're seeing in that, are a lot of data management companies that have existing security applications and are taking that and transforming it from where they are into blockchain. We also look and see companies with newer business models that are doing things like wallets, exchanges, Oracle-type services that are moving from or building into the blockchain itself. And we look for the companies that are foundational. So if you think of blockchain as an operating system, we look for wallets, identity services companies that are building onto that next layer that have a lot of scale. Because it's really interesting, it's nice to do aspirational things, but until you've got all of those foundational things, supply chain is one of the things that Greg kept hammering on today, which we think is probably the biggest opportunity. That's exactly where we're looking, but to make sure that all of those layers are there first. Yeah?
So are you guys investing in companies that are building on RCON or just, blockchain-based businesses?
They have to be using RCON, and we'll talk, so it's a great question. So we'll talk specifically about what that means, but a lot of them already have an existing blockchain business. So Trusted Key already built on Ethereum. So Lucidity, which will come in and talk about what they're doing, has already built a significant sidechain architecture using Plasma, and they'll talk about how they're moving into the sharded namespace architecture of RCON. So they've got to use RCON, but they may be an existing blockchain business, or they may be an existing business that has traditional software or are still concept stage. Did I answer your question?
Essentially, yeah, but I guess I just have more questions. Okay, so how do you guys enforce folks building on the RCON testnet that we just launched today? So how are you guys enforcing that these businesses, who may have to build on RCON against their financial interests as opposed to building on something new? How do you guys ensure that these dApps are going to be on RCON within a reasonable amount?
Great question. Did everybody hear that and give me 4 slides? And I've got 2 slides dedicated to just that. So I appreciate that.
Maybe you could repeat the
Yeah, the question is, it's pretty simply, we're not live. We went live 2 hours ago on a test net here in Berlin. So how do we ensure and enforce that companies are going to build on our chain? What was the incentive for them to do that when we started the fund back at the beginning of the year, when we still didn't have a firm date, and then we had a firm date, and now we're live with the test net. So I'll come back to that and answer it in detail. But we look at a couple of things, right? It's from an investment standpoint, right? It's all about execution. Ideas are great, and we look for people to come with a solid business plan, a technical roadmap, and all of the things that you would look for to roll out the software, just the way Meta every week talks about where we are in the node architecture and everything else. But if there isn't an execution plan and a full team to do it, we're not looking at that as a great investment. Or what we're doing is having the conversation with them as to how they round out that team to make it more execution-oriented. Foundational elements, like I was talking about before, the speculative ones, what are the things that you need to actually deliver and demonstrate that the platform scales? And there are two things that are really important there. The token economics, what is the cost of transactions, and can you show that there are actually costs being associated with the transactions? Because if it's in a network like a Hyperledger, and we're seeing people migrate from there because they're bumping their heads on what they can do in those, particularly in supply chain areas, they want to hear from us what they can use. One of the companies we're talking to is a healthcare company. And while changing the healthcare industry, in our opinion right now, is speculative, all they're doing is very simply looking at bills and the billing infrastructure. 40% of all healthcare bills in the US today have some kind of error on them. And by putting them and moving them to the blockchain, what they're able to do is illustrate finality and making sure that the data is accurate and being able to create a transaction flow. We call it follow the money. If you can't show where there's a money flow that's powering the transactions or causing someone to have a financial or economic incentive, then why are they doing it on the blockchain? Why wouldn't you do it in a centralized manner or with some other technology? So there's got to be a transactive element to it. Sustainable advantages within the portfolio. As we put companies in, particularly for our chain, and we'll talk more about this, is what are the things that are synergistic? If you look at the existing companies, LifeID has got 2 to 3 of the existing portfolio companies between ourselves and Reflective Ventures that they're building on. Trusted Key, which is another digital identity company, is also able to use their platform to build for Digital Town, for Lucidity, for other things. They're basically going to become they want to become the Visa of the blockchain network. They want to be able to run the transactions for them. So we try to create cross-collaboration. It's easy to invest in a company. So what are we looking for? Great leaders, companies that have good technical thought, and where are they going with the platform? Because blockchain's not internet bacon. Just because you can put something on the blockchain, have they thought through how that's going to work? And more specifically, how's the data onboarding going to work? Because it's very easy to say, hey, we've got this great existing business, or we've got a legacy business like employment verification. And we've talked to a couple of companies here today, and we've talked to other companies in the past that want to put credentials onto the blockchain. Going forward, it's a really easy thing. As people graduate from college, or you looked at LinkedIn, and you want to be able to take those credentials, put them on a blockchain, get some consensus, get some validation around those, that's easy. How do you get legacy data in? Question.
So would you say your prime focus now is investing in companies that are solely focused on increasing their efficiency, for example, or playing it in the state? What are the main value drivers that you see being pushed forward in the blockchain space? What kind of investments that you're making in the blockchain?
So 2 different questions. What do we see are the value drivers, right?
So value drivers, for example, do the companies that you're looking for see a strong consensus model? Do they want to see
So I kind of answer it in a roundabout way because adventurous can be a lot of things. Putting any healthcare type information on the blockchain is seen as adventurous because people have questions about the technology and everybody's got privacy concerns. But at the same time, invoices and bills, and no offense to my friends in the back of the room, are boring. But they get a lot of scale, and it proves that blockchain works because you can put millions of transactions or millions of files and records on there. We like that. We like things that are less interesting, that prove out the model, that allow you to put millions of transactions, moving documents around. In the supply chain industry, 20%, and this is a study that IBM did with Maersk, which is one of the largest shipping companies in the world, as a blockchain example, it's a $4 trillion a year industry. 20% of all of those transactions are literally moving paper around. It's an n-squared problem. For every handoff, for every government agency, for every shipper, for every customs agency you need to touch, you have n-squared number of emails that are going back and forth today. If you write it to the blockchain, you immediately reduce all of those. So are those adventurous? Do they work? Are they safe? They really do show scale. And that's where the focus is. So that's what we also do by quantifying some of the market risks as well. So the investment process, we've talked to probably north of 100 companies since the beginning of the year. We've all got big networks, and honestly, we've done very little marketing today. All of it's come from our personal networks. I spent 25 years in the consulting world and running venture funds for companies like PwC and a local company in Seattle. So the deal flow is coming to us. Some of it comes from the co-op. Some of it comes through thought leadership that we publish. It's a straightforward process of documentation. Evan runs the front part of the funnel. We screen the companies. It's got to be a blockchain company. And we start the conversation with that introduction to what we call meaningful use of our chain. So every company that we talk to up front in the beginning, we tell them they have to use our chain. We'll go into depth in that. We go through the prioritized deals. We probably see, and this is a high number, maybe 1 in 10 of the companies that initially come in, and people will say that's a pretty big number. We've got a lot of good deal sourcing because what we've done is cultivate partners in the former Big Four, Big Five accounting firms where a number of us have history. We're getting it from other angel funds, fund to funds. They like Pithia and they like the RChain story. And they like the fact that we're one of the few companies that's solely focused on nothing but blockchain investments. There are certainly larger funds and older and more established funds, but because we're laser focused there and we've demonstrated expertise and a capability of working with the co-op, and with RChain, which has been a two-edged sword, some companies have said, hey, but we've already got a blockchain business that runs on Ethereum. And we say, at what point can you no longer scale? At what point will that no longer work for you? And we have that conversation with them. There's a presentation to the team, and by that time, we're probably 80 to 90% sure that we're looking for an investment in the company. So we've gone through looking at the management team, looking at a business plan, looking at a go-to-market strategy. How are they going to scale? Is there acceptable use of the proceeds? And then asking the deeper dive around blockchain. Do they have the architects? Do they have the technologists? And have they started to understand what is it going to look like to actually use and build on the RChain platform? If the answer is we don't know what Rolang is, that kind of is a red flag. And what we've been doing is pointing them to the documentation, and we've also started developing, working with a number of people to develop training and documentation as well. And then in stage 3, we go through a detailed analysis. And by then, they need to have gone through a full legal review, Do you have your paperwork in order? What do your founders' agreements look like? Do you own all your IP? Because we do run into companies that are working with all contractors because they're startups and they don't have a lot of funding. So one of the questions is, have you signed IP agreements with all of those contractors? And it's an important question to ask. What's your corporate structure? And these are some foundational things that you would find in any VC. And then it gets into deep questions around token economics and data onboarding. How is this actually practically going to work in a blockchain scenario? Yeah.
So, with regards to your comment about there being a pipeline, and it does sort of seem like the conversion rate on number of deals that you've seen versus number of deals that you've done is actually quite high, which can be, a good thing or a bad thing. I noticed in the Pithia's agreement that you guys are actually required to invest in 12 companies over the course of the next year.
Yep.
Does that impact your investment thesis or criteria in any way, or is there some, potential kind of just misalignment between setting a number in stone versus, really going after good deals only?
So 12 deals in that time frame is pretty reasonable. It's one a month. It's a faster number than you'll see in a lot of companies, and different people will debate. We've got to do good deals for the co-op. I mean, at the end of the day, we want to be able to show that these companies have a good business model. They're an actual company that's there to make money, or maybe it's a nonprofit that's using it in a meaningful way. And that's kind of what we talk about here. But that's the number that we agreed on with the co-op probably at the beginning of the year. And that was a number that Greg set with us, and that's just kind of something that we've agreed to. And it's 24 by the August of 2020.
The way you guys were initially seeing was that you were going to a certain number of rocks, right? Right.
Correct.
Could you kind of talk a little bit about your cash management strategy and maintaining this huge balance of volatile cryptocurrency?
So it's a little beyond what we were doing now, but for this conversation. But with the agreement with the co-op is some of the investments, and to date we've done about half of our investments as a split between rocks and cash, because some of the companies obviously need to pay their employees, they need to pay for physical space, they need AWS, whatever, and we do have a partnership with Amazon, but we are doing a balance of managing cash and using rocks to pay or invest in the companies.
Just going back to your earlier point, obviously you guys do need to do good deals for the club and for the space, but I haven't really been able to figure out sort of what is the ultimate goal of the fund. Is it to support the ecosystem first and foremost? Is it to return, generate a great return for Pithia's LPs? If it's the latter, who are those LPs exactly, and how does that work?
So today, the only one, the fund, Catena Fund 1 is dedicated to RCON, 100%. So everything that we do is to build for RCON. So we look for great companies should give good returns. There's lots of reasons why companies don't have great returns in the market, but there should be an alignment between those two things. So let me get through these next two slides and then we'll come back. Meaningful use is probably the most important thing. Every investment that we make in a company, and we start this in introduction with them, says you need to use RCON in some meaningful way within your ecosystem. Okay, so I've gone way over. So let me just speed up. In the ecosystem, in the way that the platform is rolled out. So RCON has got to be part of it. Doesn't mean that they have to be solely on RCON, but they have to develop a way that uses RCON. And some examples are, it's got to demonstrate the power of the platform, that the way that it scales, it's running lots of transactions. It demonstrates, and I'll send these out so if you don't want to take pictures, but feel free to. It shows some of the marketing. We're able to talk about it in public that this is an RCON-based or powered transaction platform. It supports node architectures, and it supports transactions on the node. So contractually written in, there's a generic agreement that says by the launch of mainnet, which we had forecast for December of 2018, by the end of Q1 of 2019, you had to demonstrate some meaningful use of the RChain platform. Now we're going to change some of that because obviously we're pushing it back, and we'll work through what those are. And we want them to be visible brand references. Being able to demonstrate companies like LifeID and Trusted Key are doing, starting with tens of thousands, then going to millions, and ultimately hundreds of millions of transactions an hour is a huge opportunity, not just for blockchain, but to demonstrate why RChain's concurrency makes it superior. Is this piece clear? Because this, I think, is probably the most important part of what we're talking about in terms of meaningful use. So this is contractually written into every investment that we do. I'll go quickly through this because I wanted to give Evan some time to talk about the team. Industries, identity, we talked about wallets, media and entertainment. Lucidity is going to come up and do a full presentation, so I won't talk through them. We try to take a significant minority of equity in the company. We don't do token swaps. We don't fund ICOs. We get a lot of feedback from potential future limited partners and other companies that they're not interested in taking on that kind of risk. So when we invest, we're looking for an equity stake in the company itself versus trading tokens with them. Or we get a lot of companies coming to us saying, hey, we've got this really great opportunity to do an ICO, and we need $500,000 or $1 million to go and make it live, and they don't talk a lot about their business model. That's kind of a red flag for us.
Would that also mean that most of the companies that you end up investing in are for-profit companies? Or do you also cater to decentralized projects, which don't necessarily offer equity as a way to invest?
So some companies do offer equity, whether they're decentralized or not. Even if you were a decentralized exchange, somewhere there's a fee structure, somewhere the company, some part of the company is making money that we've got to take an investment in. And we do want to return something to the co-op, but equally as important, we need to demonstrate the power of the platform, especially with these early investments.
Do you generally cater to enterprise companies, like enterprise software, or bigger companies, or smaller ones?
It's usually smaller companies, and it's been, like I said, anywhere to 10 to 20%. We do see a lot of enterprises that come to us. They want to do side deals with us, and we're working on POCs with them at that level. And obviously, we're not going to go into a $100 million or $1 billion company and be able to take an investment there. What we'd like to do is then find one of the portfolio companies that are out in the field and do a three-part deal with them, where the enterprise is providing some level of thought leadership and expertise, and the company is going to do the development, because we do want to give a return to the co-op where we can, and to ourselves. Go ahead.
I guess, well, I just wanted to head on to what you were saying. Like, are you guys considering, supporting decentralized infrastructure, even if it doesn't come with profit incentive? I think we can all kind of agree that there are core technologies built on Ethereum that don't have a fee structure, like MetaMask, like Oasis DEX. Yeah. And those things are really important for the ecosystem, which kind of returns value to just token holders generally. So do you guys ever consider like helping to support core RChain decentralized infrastructure if it means that there's no equity incentive?
So that's a good question to have between ourselves and the community and the co-op. And I'd love to have that as a broader conversation, because we want to return financial gains to the co-op. But if it was really something like a next generation MetaMask, or going into MetaMask and saying, or even to CryptoKitties, saying, yeah, this might not make a lot of money, but it's really important to demonstrate how well our chain can scale. I think that would be a question and a conversation, and an open conversation we'd want to have with the co-op. For future LPs, we got to show a return. But in this one case, because we've done something super specialized with the co-op, I think people would understand it. And I put the question back to the broader, our chain community and the way we do things, right? And the way Greg and Kenny pushed things back this morning. If that's something we want to do, let's have that conversation, agree on it with the co-op because they are a partner in this, and let's do it.
I'm assuming this is a closed-end fund, not open-ended.
Correct.
And what's the investing horizon?
It's a 10-year horizon.
So they're locked in for 10 years?
Yeah. No. It's a 10-year horizon. Distributions can be taken along the way as companies have a liquidity event.
Do you have any policies on selling some of your stakes within a short period of time? Like, let's say, if they do get listed on exchanges, or do you hold it off till the very end?
I think it's going to all depend on the deal. I know, I'm running out of time. Some quick points on the board, and then I'm going to let Evan talk about the team. Lucidity will talk about Trusted Key is in, and I wish I could talk about all of what they're doing, with the healthcare industries. Security Consortium is working on 150 million people for digital identity. Digital Town has onboarded dozens of merchants for their smart wallet program and will be live in a month with an Ethereum and Bitcoin-based wallet. We could probably get rocks in, and then obviously Revs once the mainnet is live, and then Life ID. You've probably heard a lot from them, has got partnerships, and is seminal and foundational with the rest of the RCON ecosystem.
Yeah. Great, thanks, Lawerence. And I'm not going to take too much more time. I know Greg has 30 minutes to talk about Reflective, and with 2 venture funds in the ecosystem and a lot of portfolio companies, we see all of this that both we and Reflective do as incredibly positive sum. So like you talked about incentives, if foundational things do well, if our portfolio companies do well, that ultimately impacts the price of Rev. That gives us a lot more capital to play with and invest in and ultimately return to the co-op. So I think people ask a lot about kind of what is different about Pithia, and I think the biggest thing is that we have a lot of operational expertise. So most venture funds are professional investors, but we have a lot of professional operators. We invest in technology businesses that are building on our chain, and most of our team has built technology companies themselves. And we also have a lot of domain-specific expertise on our team, so be that financial, legal, technical. We try and provide a lot of support on those areas as well. So Lawerence didn't introduce himself. He has 30 years as a consultant, as a venture investor, as a board member of a number of companies. He's a difficult person to introduce because sometimes it sounds like you're exaggerating if you're accurate. Roland has a couple of successful startups. He's been involved with the co-op for some time. He had a couple venture-backed companies and has worked in both software and hardware. Tamara is an attorney. She is our general counsel. As you are well aware, in blockchain, there are a lot of legal issues that come up, and so her role is to stay on the forefront of those for us and for our portfolio companies. And then many of you may know Navneet as well. He's been involved with the co-op for a long time, dating back to Lively Gig and Scenario. And then just in July, Carly and myself joined. Carly is our CFO. You asked about cash management. She has 20 years on Wall Street, or several asset management firms, Deutsche Bank, Franklin Templeton, has been a financial advisor to a number of startups and has made dozens of angel investments with her own capital. That's me on the right. Previously, I was involved in blockchain for several years, leading emerging tech research at PitchBook. Prior to that, I just missed John West. I was Novo's intern about 5 months before he started at Novo Pham. I'm a Harvard man as well. I think we have several other Harvard grads in the room. So I've been running the top of our deal funnel, handling all of the requests that come in, managing the process. So like we said before, we're looking for companies that are solving real-world business challenges that are going to generate some sort of financial return. And we encourage anyone who knows of any potential companies or just smart people who are building on blockchain, please reach out to pitches@pithia.com. So I'll leave the rest of the time for questions, or I know Greg would like to get to your talk as well. Thanks.
So I'll start while Renal is going to download it off of his desktop or off his laptop. We'll put it on here. My name is Greg Heuss. I'm the managing partner at Reflective Ventures. I've got with me Renal and David, one of the partners. We've got most of our team in the audience as well. So not having the slide up here, I've talked about Reflective a few times, so I can tell you if you guys don't know about us, we started the fund the first quarter of this year. We had similar objectives, kind of like what Lawerence was talking about, in that we had to invest in 12 companies in the first year. We had to do a set amount of events that we were going to be part of. We had to open an office space, and our whole objective is to incubate companies. So that's kind of what we're about. And I'll let David and Renal will go a little bit deeper into the flow that we're going to use as far as looking at companies and the steps that we go through. Renal will talk about some of those companies that we've actually made investments into.
It's on YouTube. So.
All right, so I can jump straight into the team, and one member that's not up here that's in the audience that just joined us, and the secret to get through to any of us is to use Rebecca, who's our office manager in EA. She's not up here. But we've got one thing that's different about Reflective is the experience that we have. So we all have been on the other side of the table. We've all been where a lot of you guys that are looking for investment have been before. So not only have we done that, we've been LPs and funds. We've been on Wall Street. These guys have all done that. We do have 3 different offices. So we've got Seattle, the headquarters. Then we also have one in San Francisco. And Renal and Kevin are out in New York. We will jump through this as quick as we can. So we would have a video to show here if we do have one real quick.
Yep, we'll get it.
One of the things that we've taken a lot of time and pride in is developing and creating content for the RCON ecosystem. So we've done that through the lens of Reflective, but it's always shining back on RCON. And a lot of the videos that maybe you've seen with some of the Greg Meredith interviews or the Nash interviews as well, we've done that through a group called Futurism. We also had them create one shot in our offices, and this kind of gives you a little bit of touch of some of the portfolio companies that we have and why they've chosen Reflective and RCON. So I'll let him take it from there.
Is the sound not connected? Excuse me? Is the sound from the laptop not connected?
Proves on some of the core blockchain technologies that are out now, and it really is this kind of bottom-up approach to really figuring out how to scale high transactions and high velocity and high security in a decentralized blockchain ecosystem.
We really see today the hub of innovation that Reflective is creating. It's bringing together teams of blockchain entrepreneurs, and It's really helping them employ the technology. This is why Reflective and RChain will come out on top. Because you can't just create a technology and just leave it out there. You need to support people who are using it. The real value of blockchain only comes once people start building applications on top of it.
We always said we wanted to be blockchain agnostic, but only until a blockchain showed up that we can actually work with. And so when RChain came along, it was kind of like, okay, this might be the obvious solution that we were looking for.
A lot of blockchain companies are focused on protocol levels, whereas RChain have seen this, and as a consumer platform building on top of blockchain technology, RChain is like more focused towards like actual platforms that can be built on top of their blockchain. And that's like something we don't really see a lot happening within the blockchain industry.
With Reflective and RChain, you have an amazing protocol. And then you have Reflective Ventures, which is bringing people to use the protocol and supporting them in their using it. It's not a protocol in a vacuum. It's innovation brought to life.
It's a robust technology that kind of is something much more unique and different than everything else that's being offered. And the fact that they can get so many transactions per second compared to their competitors is just phenomenal.
There are some things about the transaction speed, about the real calculus that are super interesting to us in particular. The benefit to going on our chain versus another chain would be doing less work, right? We don't have to implement or try to implement those systems on top of some other chain. They're just there natively and we can take advantage of them.
RChain is helping Switch reduce its global footprint by allowing us to run computational analytics and AI machine learning closer to the edge. And rather than having high levels of centralized computing and also basically high computational costs from a proof of work standpoint, I think that really helps us solve some of those problems.
We found that there were tons of opportunities for synergies with our platform. One of the big things that RChain is tackling is enterprise level scalability. And that's very important to us because we want to be a platform for hospitals and for massive research institutions. The second thing that's really important to us that I want to stress is RChain's built-in privacy protocols. They have this one thing where you can basically have namespaces, which are segments of blockchains, and they're completely secure, they're built that way. We want to, from the outset, be very upfront and very invested into the security and privacy of the data that we're dealing with, and RChain was perfect for that.
It has the ideal infrastructure that can provide probably the highest amount of scalability that I've seen for most blockchain projects, while still ensuring data resilience and security.
The Reflective folks have been highly engaging in a very dynamic and fast-paced world. I mean, the level of engagement and the level of interaction was night and day versus a situation where you feel combative with an investor. They very much allow the project companies and the entrepreneurs and thought leaders and thinkers to kind of do their own thing and then just make sure that it's aligned with their process.
It's a very conducive and very supportive community, particularly for an early stage startup where we need advice on all these different things that are happening.
There's a lot of transparency, a lot of community building, a lot of resources available. It's not sort of a traditional VC, oh, here you have funds, now go, build it. But if you need, mentors, you need some developers, whatever, they're there to incubate you.
And another thing that they have is they have really cool people. They're down to earth. They're very easy to work with. They have this sense of community, and I really like that.
We're just starting the family, right? We're just getting to know everybody, and I think as we start accelerating our development, and as they are launching their testnet and their mainnet, the relationship's only going to improve. If you're looking to kind of engage in a collaborative way to build on core infrastructure, then Reflective and the RChain team is probably the right team to work with.
All right, so that's a few of the companies that we have invested into. By the way, this deck, I know we're going through it super fast. We're going to put this up on Discord so you guys can grab it, so no need to
I think the goal of RChain in general and the community
I'm going to hand it over to David
to find new ways.
And he's going to talk to you a little bit about our deal flow.
Hi. Yeah, in case anybody's wondering, the Pithia Reflective relationship is not competitive, it's cooperative. We both go through the same waters looking for similar deals to port onto the protocol. And by the way, let's keep this interactive, so any questions, feel free. There was an earlier question in terms of how do we determine or ensure that a company is committed to the protocol, committed to the RCON protocol. RCON is our sole limited partner investor. So we are dedicated to ensuring that any company that we identify as an opportunity, that that company is committed to deploying their product or platform on the protocol. And we do that via a strategic partnership agreement. And the strategic partnership agreement funds in stages. And those stages require the satisfaction of certain milestones. And those milestones are integrated with the anticipation of the portfolio company development meeting the RCON cooperative protocol development. So that come time for the deployment of your platform or your product on the protocol, we will align that. The other thing we have recently, and I want to point him out, RCON has hired a new head of their solutions group, Ned Robinson. Ned's right back here. Say hello to Ned. Now, the reason Ned's important is because he is our face, our link, our contact into RCON. So companies that are looking for technological assistance, direction, capability, Ned is the voice, he is the person, he is the resource to assist portfolio companies with ensuring that their tech stack, whatever they're doing relative to integrating into the protocol and writing on top of the protocol, is going to happen in as seamless, as efficient a manner as possible. So here we go, the investment process. So what I'm going to go through essentially is how we do this, what we look for. Did you have a question? Okay. What we look for, how we process investments, and sort of thematic issues. One of the more important, and Lawerence touched on it earlier, one of the more important issues here is we are looking for businesses that have a model that identifies, presupposes a transaction volume that is significant, blockchain transaction volume, and that blockchain transaction volume is facilitated and thereby enhances your business proposition by use of the RCON protocol. So if that concept doesn't really resonate with your business, then this probably is not the transaction structure for you. Because first and foremost, the protocol has to be something that aligns with what you're trying to do. And that in a large degree is scalability and security. So what do we do here? It's the screening process. The screening process has the usual, does it make sense? Is there a scalability opportunity? Is it in an industry or a sector that could improve significantly via a blockchain application? And then how does that evolve through the development of your business model? We don't write the business plan, and we don't write the financial projections. We certainly scrutinize them. The financial projections, in addition to just the financial representing the financial model, also need to account for and describe the method and amount by which transaction volume starts to happen in your business, and then how that's reflected into the protocol. Pipeline management, so the screening process, again, you can read all this and get an idea of how we do it, but there's it's sector specific. It's some level of capability in terms of knowledge, both in running a business, articulating a plan, but also is it meaningful? Is it something that's going to change the way these business is done? We see the opportunity in blockchain in a couple of ways. I won't go too deep into it, but the foundational issue, and I come at this largely from the legal side, but you've got essentially historically two methods for capitalizing businesses. debt, and equity. We view the token and the tokenization of a business as a third asset class. And then it's the use of that asset class for tokenizing a business opportunity and the proper deployment of that asset class that, that may or may not make it a security. We're not saying we wouldn't support and work with companies that are issuing security tokens, but we believe there's a process and a methodology whereby you can tokenize and finance the development of your business, and it needs to be neither asset or equity, or rather debt or equity. So you're not borrowing money and you're not giving up ownership. So again, you can read all this. That's kind of the process. Due diligence elements. Again, I've gone through those already. The evolution of the business is, and your tech capability and your in-house tech capability, so that you know what you need to do from a tech standpoint relative to interfacing with the RCON protocol. And then if you don't, you know the questions you need to ask and who to come to are very important. And there's a timing element to this now. Testing this up today. We expect mainnet to go live March of 2019. So between now and March 2019, if you're a portfolio company, and I see a few of them here, if you're a portfolio company, we need the interface and the onboarding exercise, if you will, to be happening now, with the expectation that come March 19, you're porting your business onto the protocol. So we're developing the economy. Ultimately, this is about developing an economy, right? And that economy is part of the four pieces to this business opportunity: protocol, node validation exercise network, and economy. So we're developing economy. Yep. Yeah, sure. I mean, it's got to make sense. Decentralized infrastructure for the sake of decentralized infrastructure isn't that interesting. We are big believers in decentralizing goods and services, access to goods and services, and reconstructing an economy around a more decentralized access or decentralized access points. So the short answer is yes. The more detailed answer is it depends. Because decentralization for the sake of, or an articulable sort of interest in decentralization because it's interesting may not make a lot of sense from an investment standpoint. But something that makes sense from an investment standpoint to build a decentralization model around a sector or sectors could make sense. Absolutely. Okay. Investment, sizing, so here you go, return potential and conviction. Is it meaningful? The conviction thing really has to do with meaningful. Is it an opportunity? Does it make a lot of sense? Are we bullish in this space? And we have a little more visibility into certain spaces than others that we like. The return potential is important. It's important because, again, our sole limited partner is RCON. Our split post satisfaction high watermark is 80-20, so traditional sort of LP, GP kind of allocation. So it's important that we look at opportunities where the return potential makes a lot of sense. It isn't necessarily in fact, it doesn't solely drive the decision, but it's an element in the decision. So to the question relative to decentralized access and an infrastructure play that may be a platform, may not. That's a possibility. That's probably going to depend a lot more on how that interfaces with everything else we're doing. Because ultimately we're building an economy. And we're building an economy to operate on a protocol, the RCON protocol. I think that's kind of, I mean, again, this is a lot of detail. I don't really want to read from it. We're going to post it so you can get to that level of detail. And if you want to ask any more questions and get into any more detail after this, I'm happy to do so. Okay, so I think we're turning it over to you now, Renal, right?
That's right. This is working great. First of all, apologies for like some of the fonts looking a bit weird. We were having tech issues, as you guys noticed, but the version we sent out on Discord should be significantly prettier. So let's talk about 2018. Frenetic year for us. In less than 8 months, we've funded 21 companies. We've reviewed over 300 pitches. And when we say reviewed, we mean went through the screening phase. Our total pipeline is probably a multiple of that, 3 or 4, but there's a lot of stuff we decide not to screen at all. Our hit rate is 1 in 14 of things that we've screened. And our portfolio companies represent operations in 5 continents and 10 verticals. And these aren't narrowly defined verticals. These are fairly broad verticals. We've also conducted or participated in 10 plus events. Some examples, a lot of you have probably attended some of these: Consensus in New York, Harvard undergrad blockchain group, etc. We've also helped create the sales process for the validator sale that's going on right now, including the presentation model and legal contracts. I'm actually going to ripple through this as fast as possible because I'm giving a talk on that at 2:15 with Kenny. And finally, and we think this is a huge part of it, done a lot of marketing and increasing awareness of our chain. A lot of the videos that you've seen done by Futurism, et cetera, have been really curated by us. So I think this gives you an idea of, it's been a great ride so far. We expect the pace to stay, but we do a lot more than just invest in companies. We view ourselves as an incubation studio in addition, and give our companies a lot of support. I'm going to rifle through our entire portfolio now of 21 companies. Again, the formatting's weird, but we're having tech issues with the laptop. I'm just going to give you a one-liner on each of them. Resonate, I don't need to introduce at all because they're speaking next. Blockchain at Berkeley is a university relationship. To answer your question, that one doesn't really have a profit motive, right? It's a relationship with the university. We do events with them. We've met tons of great companies, and it's one we're really excited by. Expansive, really supply chain management, mostly for commodities. Every is a retail platform. Access Network connects people to free agents giving financial products in underbanked and unbanked regions. The open platform is really, call it a platform on top of blockchains, allowing you to be blockchain agnostic, but still conduct payments and application access. Proof Media is a media company battling untruthful content. Witnet is an Oracle solution which will connect any online data source, really: sports results, stock prices, weather forecasts, the kind of things you need to verify that a contract's actually run. The Harvard University Blockchain Group is another student-run organization that we're partnered with. We've actually invested in 3 companies out of Harvard's innovation lab because of that relationship. So that relationship is one we really love. We remain very, very close with them. Veriledger is an accounting system to support, the financial and technological changes that arise out of blockchain and crypto. Next page. Koigel is an efficient marketplace for investment professionals, sell-side research, et cetera. Massive market. Reshore, blockchain-enabled insurance. Think about it as, what if I could insure my Uber ride or my Airbnb stay? Augmate wants to be the platform or the standard for IoT devices and wearables. Really excited about that one. All of them, actually. Switch, energy platform that tracks worldwide level of CO2 emissions. Also met their founder out in Boston when we were meeting the Harvard University group, co-founder. Translo, so Translo is the first of the 3 that we invested out of the Harvard Innovation Lab, and that's trying to transform the research ecosystem for medical research, let patients sort of have agency over their own medical data. Encrypt is a decentralized, anonymized content provider to ensure, to prevent censorship of content by rogue or otherwise unsavory governments. Wamvi is a B2B SaaS platform. Hey, Ian. HelloFriend is a platform for buying and selling social experiences, rent out tickets to come to my frat party, that kind of thing. Rubica, leading edge security company. They're likely also to be working with the RChain ecosystem on our ROC to REV conversion. NetVote and Govern are both decision management and voting tools. We really like everything in our portfolio and are really excited to work with all these entrepreneurs going forward. With that, I will leave it to Greg to close out to talk about what our priorities are going to be for the next 6 months.
And just one thing to note on what Renal was talking about with those 21 companies. So important for everybody in this room to know that everybody here that's a co-op member, which I'm assuming you all are, you're all owners in those companies, right? So their success is all predicated by how much support we give them, but also you as the RChain community. So very important for you to reach out and talk to those guys. There's a lot of them here in the room. I know that Ned's going to be doing a lot of that and coaching them and pushing them over. For us, for the next 6 months, it's all about the portfolio companies. So that's what we're doing. That's what we've promised to do. We think that we're probably going to get, I don't know, I would say a half a dozen more maybe by the end of the year so that we can push as many to the RChain platform as we possibly can. The validator sale, you guys all know that these folks on the team are working on that now. The university relationships that Renal mentioned, we've found not just those 3 deals, but also a ton of great talent that's coming out of those universities. So very important. We're working with the University of Washington now. We're going to start working with Stanford, I know, University of Michigan. There's a lot of them that are still on the board that we're talking about. And then more verticals that we look to get into. People are always asking us, like, what space are you looking at? Really, we always use the line that the space is way too big and it's too early to just pick one vertical. You heard Renal go through that we are in 10 different verticals, if you will. There's probably more. And then on the international side, so I know Steve and Renal are getting ready to hop on another plane in another week to head over to Asia again to take a look at some of the companies that are out there. But we'll probably have an office over there sometime, and I know we're talking about one here in Berlin as well. So that very quickly is what we've got. Again, this will be posted up on Discord. Are there any last questions before we get kicked out of here? Yeah, both of those deals are up on Discord. You can find them. If you don't, direct message us and we can send them to you again. Radical transparency. Yeah, they're on GitHub as well.
Awesome, great.
Yep. Yes.
I assume that some of those 21 companies are going through similar stages. Are you looking to create any collaboration spaces for them to kind of speed up some of the process?
Yeah, so first of all, our office is structured as a collaborative space. We literally occupy only about 1/5 of our office. We have a couple of startups that are working out of there right now. And, you know, as space provides, we have people whenever they're in Seattle and they want to talk to the RChain Co-op. I actually got Rebecca to send me some photos and then I forgot to add them to the presentation. But so that's stage 1. So that's just Reflective in general. But Reflective and basically all the parties are going to be working with Ned Robinson for onboarding. We're going to talk more about that later. There's actually a session tomorrow that Ned has, and companies that are interested in onboarding should definitely attend that. But the high strokes will be that there will be a dedicated Discord channel, and there will also be a dedicated Discord server itself that is just for portfolio companies. That's so they don't have to like bother everyone else with, you know, very specific onboarding related questions. And we're also looking to bring on third-party development resources that people can hire if they want to and have those deals put in place. So sort of an all of the above approach.
Yes.
Okay, 2 questions. One, about how much capital have you guys already deployed? And 2, how many of those deals that you've done actually are counting towards the kind of 12 deal per year goal?
Well, we hit the 12 about 2 months ago. Okay. So that was for the year, the calendar year 2018, right? So we started in think we got the fund going at the end of January. We're at 21 companies right now in August, so we've surpassed that.
Yeah, not to be glib, but like we didn't, initially when we saw the deal flow, we thought the 12 things going to happen. So it actually helped being really selective because we were like, yeah, we know we'll get there. So now we can, so we were able to really ratchet down the hit rate.
And sorry, just one more question. It also says in the contract that you guys are going to secure 3 major strategic partners. One, for example, a potential side chain offering. Can you give us any updates on the progress of that, or are there any interesting projects that you're looking at?
So the open platform is one of the side chains. So open platform Witnet would be 2 like, pure infrastructure providers that we're partnering with. I would argue Switch and Augmate also are very similar that way. So if you think about it, they're fully tokenized economies of their own, and they're solving a very specific class of blockchain problems. And so we view that. We are talking to a lot of large enterprises right now, but to be honest, as you can imagine, the sales cycle there is very different, and you usually need to have a live working product. So post mainnet, a lot of them are like, this sounds really interesting, but call us in April. So, and we will.
And the university deals are also, we consider those very strategic.
Yeah.
Yeah, in the back.
Yeah, how exclusive is the use of the RCON technology in your contracts? Because actually the mainnet is not still yet launched.
So
the mainnet is not secure, and I as a company need to use a more secure technology for, I don't know why.
Right, we never discourage a company to use another chain if they would like to, if they're already involved, if they're already on Ethereum. We know that they will eventually migrate over to our chain when our chain is ready. We have that faith and confidence, and as David mentioned, we have that specifically tied into the strategic partnership agreement, and most of that is based on deliverables on tranches that are going to, additional funding is going to drive you over to our chain as well. But you can certainly be on a competing chain, if you will, in the beginning. All right, everybody, thank you. Oh, sorry.
Hey, yeah, I just wanted to follow up on Chris's question. And I saw you had left when I came up here, but yeah, no worries, you're back. So I just wanted to, just in terms of the investment in sort of like the primitives that we need, we're open to that, right? I mean, and I don't feel like your question got answered directly, right? So we're looking at like exchange protocols. We're looking at wallet protocols. We're looking at like financial primitives, right? So we need people to use the protocol, right? And then incent them to build on it. And then thereby the value of the token goes up, and then there is more economic security for the platform.
All the projects that both venture funds are investing in are going to be more successful because of all this.
Right.
I mean, like the powerful thing about MetaMask is that it turns any browser into a Web3.
Right.
You can just interact with programs, and there's not necessarily a profit interest associated with building stuff like that. So if you guys are kind of like the tip of the spear with the development of Archie, getting people to kind of come on board, like these are core pieces of the puzzle to make you guys successful.
Yeah.
And thereby making the members of the cooperative similarly successful.
So, yeah, so all of that, and we've talked about this before, and so to that end, we invite members of the cooperative that are involved with other teams, right, to reach out and connect us and find partners for all of us, right, so that we can start developing on the platform and really building out the ecosystem.
Thank you, everybody.